Hello, I'm Tyler Tully, and today I'm joined by Odyssey Gold Executive Director Matt Syme. Matt, welcome. Thanks for joining me today.
Hello Tyler, lovely to see you again.
Good to see you too. So you've just announced a toll milling agreement for the Tuckanarra Gold Project. What can you tell us?
Well, listen, it's fair to say we're really excited, Tyler. This is a major step up for us and a really important building block in our strategy for bringing Tuckanarra back on as what we think could be a very profitable operation, and of course a processing solution like this is a pretty fundamental part of that we've been working on for quite a while. The toll milling agreement itself is for us to send 600,000 tonnes down the road to the Kirkalocka mill in 2027. So 4 quarterly parcels of 150,000 tonnes each. The first one needs to be on the ROM pad at Kirkalocka in March of next year, and then subsequently June, September and December. There's also the potential for us to add another 150,000 tonnes to that if there's processing capacity available down there next year. Terrific agreement. It's a straight up toll treatment structure, so no profit participations or gold price participations. The toll treatment price itself is a commercial in confidence, but it's fair to say it's a very competitive price, the sort of price that other companies were paying for toll treatment arrangements over in the eastern goldfields a couple of years ago. So it's a really great basis for us to take forward. We're doing a scoping study now on that initial 600,000 tonnes, and naturally we expect that will lead into, in 2028, there's an option to extend the toll milling agreement as well on a similar basis. So it's a very exciting time. I guess to put that scale in context, I mean, we'd like to emulate our neighbours up the road, New Murchison Gold, who have an ore purchase agreement, a slightly different structure with Westgold, where they send 600,000 tonnes or up to 600,000 tonnes to the Bluebird mill, and Westgold, New Murchison in the last quarter, I think they processed 170,000 tonnes in that quarter and generated something like $65 million in cash flow. So that tells you the sort of economics for these sorts of structures, these toll treatment structures. If you can find the right sort of structure and generate the right sort of ore, that's what we're aiming for with this sort of volume.
So why do you believe that the Tuckanarra project stands out?
Well, Tuckanarra has always been a pretty good project for us, and as I say, this processing solution is just one of the final building blocks. I mean, it starts with the resource, and Tuckanarra is a historic goldfield, discovered back in the gold rush. Particularly importantly, in the 90s, a company called Matana mined 5 open pits there, small open pits, and produced about 100,000 ounces of gold at 3.9 grams. So that tells you a bit about the grade of the shallow resources in that sort of environment. And we've just drilled out around those resources. Interestingly enough, there was also a very small underground operation at one of those pits that produced 15,000 ounces at about 12 grams. That speaks to the longer term potential for all of these deposits to go much deeper and sustain underground operations in this sort of modern gold price environment. So we drilled out the shallow resources around those pits just down to the top of the primary mineralisation, and we have a resource today of 407,000 ounces at 2.5 grams, about 5.2 million tonnes of ore. So the 600,000 tonnes we're talking about at Kirkalocka next year is only 12% of that total resource. So we're thinking way beyond that. But so, I mean, Tuckanarra is essentially a fairly simple, low-risk mining proposition, open pit mining with good metallurgy. It's I don't want to be too simplistic, but it's not particularly challenging from a mining perspective. And then the haulage down to Kirkalocka. Kirkalocka is 190 kilometres south of us, south of Mount Magnet, is not particularly challenging either. It's all on the Great Northern Highway. Both we and Kirkalocka are right on the Great Northern Highway. So, you know, anyone who's driven up any any grey nomad who's driven their caravan up to Broome up that road knows, it's mostly quad road trains on that road, so it's a very efficient haulage solution for us. So the real key is to have a scale of processing capacity that allows us to optimise the cash flows from mining at Tuckanarra. The other important element for us, and this is why we've done such a good deal with Gylden Resources that owns Kirkalocka, is we can deliver. It's demanding, but we can deliver in a very near-term timescale. Q1 of next year for our first batch program. And the reason we can do that is because not only the Tuckanarra resource is mostly on mining leases, but we have an approved mining proposal now, it goes back to 2014, so that allows us to mine much more quickly than if we have to go through the whole process again. We don't have any native title because Tuckanarra itself was a gazetted town site back in the day, and in fact the only significant permit we're waiting on is called the Native Vegetation Clearing Permit, which we lodged back in April. That expired in 2024. It's a very disturbed mining environment, and so there are no significant environmental or heritage impediments. Our own environmental surveys indicate there's no threatened or endangered species, so we'll finish off that permitting process shortly, but it means we can come into production. We're planning to mobilise late this year.
As you said, Matt, this agreement covers up to 750,000 tonnes, but your resource base is over 5 million tonnes. What are your plans for the future? Yeah,
and it's a fair question to ask. So we'll do a scoping study. We're doing a scoping study now that we'll complete in the next few weeks on that initial 600,000 tonnes, the minimum under our toll milling agreement. But you're right, that leaves 88% of our resource. Of course, we're in the process of finishing another campaign of infill drilling there. We did a lot of drilling last year and got a lot of very good infill drilling results, 10, 20 metres at up to 15 or 20 grams and some of those things, just infilling the inferred resources we already know about. So that will support a much bigger scoping study, which we'll finish in the next few months. That will contemplate what we can do with the other 4.5 million tonnes of resources that are not covered under the initial toll milling agreement. And it's going to be very interesting to see what that looks like. Again, in terms of economics, New Murchison up at Crown Prince there offers a very good insight into the sort of money you can make out of good, high grade. There are very few 2 gram open pit resources left in Western Australia. They should be very profitable, and so we're really looking forward to finishing that study off based on a new mineral resource with lots more measured and indicated resource, and that'll tell us about the longer term economics, perhaps over 6 or 7 years of that scale. We'll have to wait and see what the study says.
So just to summarise, in terms of your upcoming studies, what news flow can investors expect next?
Well, lots, in a word. We've been waiting to sign off on the Kirkalocka toll milling agreement for a while, and now it'll probably come with a rush. We've been doing a lot of drilling. We've been drilling since February, I think, sort of a 10,000 metre RC and diamond program there. So a lot of news from that. The scoping study on the initial 600,000 tonnes itself will be very, very instructive about the quality of that, the processing and economic outcomes, and that will be done over the next few weeks. Of course, I don't want to give a specific date for that, but very soon. Then all of those drill results as they come through. Then in the longer term, that scoping study needs to be converted to a feasibility study by 30 September. That's one of the conditions in the toll milling agreement. So there's a lot of work to do to hit that mark. And then in parallel with that, of course, we'll be doing the bigger scoping study on the total resource base. So lots and lots of news flow, lots of really good outcomes, and people will start to understand just how good a proposition this sort of low risk, high grade open pit operation can be in this environment. Again, don't want to labour the point, but New Murchison is the model we want to emulate, and it can be a very, very profitable model with these sorts of structures. Very little capital as well, of course, when someone else has built the plant.
Matt, it's been a pleasure. Thanks for your time today.
Thanks, Tyler. Always a pleasure for me too. Cheers.